Good morning. I'm Peter Milios from the Finance News Network. Stocks rose on Friday after a soft jobs report drove bond yields lower and the major averages registered their best week in 2023. Overall, the Dow Jones Industrial Average gained 0.66%, the S&P 500 climbed 0.94% and notched its first 5-day advance since June. The Nasdaq Composite jumped 1.38%. Equities notched sizable weekly gains as investors grew hopeful that the Federal Reserve's rate hiking campaign is over. The Dow was up by 5.07% in its best week since October 2022. The S&P 500 was higher by 5.85% and the Nasdaq gained 6.61%. It was the best week for both indexes since November 2022. The October jobs report on Friday came in weaker than expectations, showing the Fed's attempt to cool the economy and stifle inflation could be working. The US economy last month added 150,000 jobs, below the 170,000 payroll increase consensus estimate from Dow Jones, and lower than September's blowout of 297,000 jobs added. The unemployment rate rose to 3.9% compared to expectations that it would hold steady at 3.8%. Average hourly earnings also missed expectations on a monthly basis, rising 0.2% in October, below the anticipated 0.3% increase. Bond yields, which have weighed on the stock market the last 3 months, tumbled on Friday in the wake of softer than expected payrolls figures and lighter average hourly earnings increase. The 10-year Treasury yield lost more than 9 basis points to 4.57%, down from the 5% high it hit last month. The 2-year Treasury yield lost 13 basis points to 4.8%. Yields and prices move in opposite directions. The S&P 500 rallied on Friday without participation from its biggest member. Apple fell 0.5% after the iPhone maker issued a weak revenue outlook for the December quarter. The rebound last week came as the S&P 500 closed out a dismal period of 3 months straight with losses. The rally last week was sparked by the Fed's decision to hold rates steady for a second straight time, along with the Department of Treasury's borrowing plans that were less burdensome than feared. Turning to US sectors now, energy was the worst performer on Friday. Real estate was the best performer. In commodity-related news, despite the recent price drops and concerns about a global electric vehicle adoption slowdown, major lithium producers remain optimistic about long-term demand for battery metals. They view the current market volatility as short-term and expect continued growth in electrification. Looking ahead to the Australian landscape, the SPI futures are pointing to a 0.2% gain. Thank you for listening.